Hey everybody, how does Regulation E apply to digital and faster payments? How does Regulation E apply to digital and faster payments? That's a great question. A question I get a lot of times is, does it apply? Well, it does apply. And it is a question that comes up on a regular basis. Along with, do I have to build error resolution procedures for faster payments? Actually, you do. As technology has advanced, so have payments and the ways to be able to send payments, and so has the speed of those payments. You combine that with the effects of the pandemic, and we are definitely seeing consumers are increasingly adopting more and faster digital payment solutions. However, we're also seeing reports of digital fraud and disputed electronic funds transfers, or EFTs, are on the rise. Well, what exactly does that mean? That's what we have to actually answer. Because this has led to the Consumer Financial Protection Bureau, or we'll be referring to them as they're referred to in the industry, the CFPB, and this mini-series on the recently provided guidance that was in an updated FAQ on unauthorized EFTs from the CFPB to help shed some light on consumer liability for unauthorized EFTs. And it's also related to the obligations that financial institutions have. Very important. Before we get to the FAQ, we need to start with a few other questions. What are unauthorized EFTs? Well, Regulation E defines an unauthorized EFT as an EFT from a consumer's account initiated by a person other than the consumer without actual authority to initiate the transfer and from which the consumer receives no benefit. No benefit is a really important part of it too. Now hold on, as Regulation E also provides that an unauthorized EFT does not include an EFT initiated by a person who was furnished the access device to the consumer's account by the consumer. So if you give them access to it, that doesn't count, okay? Wait a minute. What's an access device? Well, an access device is going to be a card or a code or some other means of access that gets you access to the consumer's account. It's used by the consumer to be able to initiate electronic funds transfers. So whatever gives them access to initiate the electronic funds transfers. What does that mean? If you give your card or your code or whatever the means of access is, like say your phone to someone and they start buying things with that you didn't say they could, or they start sending money to people and you didn't say they could, well, those are not unauthorized EFTs because you gave them access. We have a lot more to come when it comes to consumer liability for unauthorized EFTs. The definition of what is an unauthorized EFT, well, that's of critical importance to consumers and to financial institutions, as Regulation E also limits a consumer's liability for an unauthorized EFT. Well, what is consumer liability if we're going to talk about that? Well, consumer liability is capped at a maximum of $50 as long as the consumer notifies their financial institution within 2 business days of learning of the loss or theft of an access device. Or liability can be $500 if the consumer fails to provide notice. And it can actually be more depending on the situation, okay? But you also have to make note of the requirement that the consumer must provide notice to the financial institution within 60 days of receiving their periodic statement on which an unauthorized EFT first appears. If the consumer fails to give notice, fails to let you know what's going on, well, the consumer may have unlimited liability for any unauthorized EFTs after that 60-day period. In other words, the consumer ends up being responsible for those ones if they don't do what they're supposed to. Now, upon notification by a consumer of an unauthorized EFT, as a financial institution, you must promptly investigate and make a determination as to whether the transaction was indeed an unauthorized EFT. And as part of its guidance, the CFPB reaffirmed that if a consumer has provided timely notice and the financial institution determines that an unauthorized EFT occurred, then liability protections will apply. Now, does this mean that victims of digital fraud can benefit from limited liability for unauthorized EFTs? Wait, what? Because what happens if the consumer was tricked or forced into furnishing access? That's a really great question. And that's because there is an argument based on the language of Regulation E that since the consumer has, let's go with, furnished the access device to that third party, that individual person entity, the transaction may not qualify as an unauthorized EFT. Dun, 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 we have suspense. However, the official interpretation of Regulation E provides a contrary answer. An unauthorized EFT includes any transfer initiated by a person who obtained an access device through fraud, robbery, or force. Well, what does that mean? It means you better hit that subscribe button so you don't miss the next video in this mini-series. For now, class dismissed.